Cost accounting. Let's look into the definition of cost accounting. Cost accounting can be referred to as the process of determining and controlling costs that originate with the tracking of expenditures and revenue. Cost accounting provides information to the managers concerning the cost related to the production activities of the organization. The cost accounting information is used by the managers for planning, controlling, and decision making. When preparing accounting information related to costing, it is essential to follow a set of standards and rules. The management uses cost accounting to make decisions pertaining to pricing. What is the best price to sell a product? Decisions regarding the products, whether to continue or discontinue a product. Production planning, cost control, make or buy decision. The first decision is related to pricing of the product. The manager would add up the costs involved in production plus the profit margin to decide the best price to sell the product. The second decision is whether to continue or discontinue a product. If a product is good, if the product sales are good, the best decision is to continue the product. If the sales volume drop, there is no income from this particular product, the best decision is to discontinue a product. Or the manager could do a different thing, which is relaunching the product. Now, before we relaunch the product, the manager should carry out some research activities, get feedback from the customers, find out what are their expectations, why are they not purchasing the existing product, what is the problem, find out the requirements, find out the expectations, do the required modification, and then relaunch the product. The manager could also introduce a new product to the market. Next decision is production planning. How does the manager carry out the production planning activities? What are the processes involved in this production activity? What are the departments involved? Is it labor or capital intensive, etc.? Next decision is cost control. How do we manage cost? And this is very important. How do we run out the operational activities of the organization? How do we run the production activities of the organization? Do we cut down expenses? Can we cut down expenses? And how do we avoid unnecessary costs of the organization? And the final decision is make or buy decision. Are we manufacturing the product in house from scratch, or are we purchasing the materials essential for the product and then assemble while modifying the product? For an example, many electronic devices in the market are produced by assembling elements from different companies and brands to make the final product.